Hello, this is Josh Belk with the Belk on Business podcast. Hope you're having a wonderful day. Probably maybe a year and a half or so ago, recorded a podcast on what is a fractional CFO, and talked a little bit through some real high level types of areas that a fractional CFO works in. And this past week, I was out in Salt Lake City and had the opportunity to sit down and work with a couple, good-sized businesses out there, and spent one day on site at each location. And in preparation for that, I went through and really just worked on a lot of, as far as what, not necessarily for these, particularly for these businesses, but I had some long flights flying out west. So kind of just went through and jotted down just kind of a list of questions that we see many times with businesses as we work with them. As well as different areas that we want to focus on in different phases of the business. What I'm going to do in today's podcast is really kind of just run through real quickly a little bit of a quick snapshot of that prior podcast, make a couple additional comments in regards to that, and then move into really what we want to focus on in different phases of the business. And then I think next week we'll start picking up on just some of the common list of questions that we see as we work with businesses as a fractional CFO. So fractional CFO, what is it? Many times a fractional CFO is called in for a number of different reasons, and I say even many times an owner will ask for a fractional CFO to come in, not really knowing exactly what they need. And so when we go in as a fractional CFO, we're looking for a few different areas or a few different pain points that is possible that this entity may have. So part of the process is looking at the accounting processes. Fractional CFO can come in bringing experience, knowing what has worked in other businesses. They'll go through a review the reporting process, who's reporting to whom, what's involved there, and then really kind of identifying what are those metrics, what are the KPIs that the business owner or a division leader may need to look at as it relates to making decisions within their business or within their department. Really doing financial analysis beyond just the financial statements. Many times people think when they think of accounting reports, they think of the balance sheet, an income statement, maybe a statement of cash flows, but really expanding that analysis into other areas, maybe building out scorecards, dashboards, etc. Next, evaluating the technology to see where there are possible areas for improved efficiency, and maybe bringing technology in to be able to resolve that. And we'll talk about all these a little bit more next week as we start getting into the specific areas or questions that many times we get answered. And I don't think I talked about this the last time, but sometimes there just needs to be some consulting. It might be the full-time CFO or the controller, some financial leaders in the business that may just need some consulting or some mentoring. Sometimes it may be the CEO that just needs some mentoring, and a fractional CFO can come in and provide those types of services, give a little bit of a different perspective as it relates to the issues inside of their business and inside of their industry. They can provide guidance for each stage of growth or each stage of the business. And I'll talk about that a little bit more here in just a moment. And then, as I mentioned, provide mentorship to the accounting team or to the leadership. And we'll see many times us coming in and filling that seat, even not as a fractional CFO, but as an accounting firm, kind of coming in and helping to mentor the financial leaders within a business. Crisis management. Your mind can kind of go crazy here, but really kind of going through what are we dealing with, prioritizing what crises that need to be addressed in the short term, which ones can wait a little while, making sure that we have those prioritized and then address them as appropriate. And then a relationship building, whether with the bank, whether with shareholders, whether with vendors, kind of stepping in and working in that area. We have a local nonprofit here that we have some nonprofits in the past. We've stepped in that role, and one currently that we're working on. There were some issues going on, and we've been hired to kind of come in and help be able to kind of calm some of the kind of the negativity, the problem within those relationships. So we'll get into potential issues questions next week, but today I want to talk a little bit about different phases of the business and where as it relates to a fractional CFO or sometimes an accounting firm coming in and helping. So opportunities by phase. So not necessarily, this is not at all meant to be a sales podcast by any stretch of the imagination. Actually, there's nothing actually involved in the podcast as it relates to the accounting firm that I own. But I really want to kind of just help you think about, as you're going through these different phases of the business, some different areas that you're going to want to focus on and think about. First, early on. So we talk about the early on, and I'm not going to, there are of course a lot of people out there with different names for these different phases. So I'm just going to kind of be general here. First, kind of the early phase or the startup phase, early on in the phase of the early on in the business. What are some areas you want to think about? First of all, as it relates to the accounting side of things, to the finance side of the business, is what is that ecosystem going to look like? Who's going to be involved? What sort of platform am I going to use? How am I going to get my reports? How am I going to get the information that I need? And then beyond that, what information do I need to be able to run and operate my business through the accounting ecosystem? Tax compliance. How am I going to set up my business for tax purposes? Am I going to be a single member LLC, taxed as a sole proprietor? Do I want to set up an S Corp, a C Corp? How do I want to function my business? So I'm bringing partners in. Is a partnership something I need to consider? And so understanding what is that tax structure going to look like, and the compliance piece as well. Hiring employees, making sure that I have the people in place to be able to make sure that that my business stays compliant. I can't tell you the number of businesses that have called us, and they're in the first few years of business, and they literally find themselves sunk because they have not addressed the tax compliance piece. They said, okay, I'm going to go out and I'm going to get this idea. I'm going to get the funding I need. I'm going to get this product out to customers. I'm going to provide this service. And they get people alongside of them and they get this thing rolling, and they never think about the tax side. And then they end up with this huge tax debt, and they end up sunk right off the bat as it relates to the tax compliance piece and making sure that wasn't addressed. So just a little bit of planning on the front end can really go a long way in helping long-term cash flow as it relates to compliance. Next, cash forecasting. So beginning to sit down and look at, okay, here are projected sales. Here are my projected a cost to be able to run this business. Is this a viable concept? The way that I'm thinking in my head that it's going to work. So bringing a fractional CFO in, bringing an accountant in to be able to help you think through these things can really go a long way in making sure that you have the cash flow to be able to sustain that business in the short, mid, and hopefully eventually long term, if your business is one that actually does survive past that first 3 to 5 year time period. So cash forecasting, extremely important. A lot of people out there, they talk about cash flow. They have cash flow on shirts and all this other thing, but they have no idea what that means. Many times people think cash flow is, well, I'll just get another loan. It's going to bring cash into the business with no real plan on getting themselves out of that debt and getting their business in a way that is going to be able to cash flow with the business that it has in place without bringing in other people's cash, giving away equity, bringing on unnecessary loans, etc. And then building out a pro forma on the front end of the business. So building out that plan. And what is this business? How am I going to get through the next 6 months, 12 months, and then these 3 to 5 year plans right off the bat to be able to figure out whether this model is truly going to work. So early on in the cash flow phase of the business, always be evaluating the accounting platform and the processes that are involved there. Revenue sourcing. How is my revenue going to come into my business, and what are the tax implications? With this growing complexity in the tax code. It was complex prior to COVID, and with what we've seen here in some of the latest tax changes here over the last couple years and what's being proposed, things are only going to get more and more complex. And so understanding what am I dealing with, have that person alongside of you that can work with you, and understanding what those laws are, what those rules are, how does it affect your business, what the type of revenue you're bringing in, how is it taxed, and how are you going to manage that tax, mitigate that tax, minimize that tax. So revenue sourcing, the tax implications, and then in the cash flow phase, understanding your liquidity. Is your business truly liquid? And there are metrics out there that can help you understand liquidity. Because sometimes you'll look at a balance sheet, you look at a statement of cash flows and get lost. You don't fully understand what's going on there. So bringing somebody in that can help understand what are the liquidity metrics I should be looking at in my business, and to be monitoring those when you're in that cash flow phase. Your budgets. But making sure that those are built out, and really this should be at every phase of the business, but especially in that cash flow phase, understanding how you're building out a budget, what goes into that budget, what do I need to be budgeting, what are some things I maybe I'm not thinking about that I need to add into the budget, especially if I'm trying to get into those next phases of business, and then sales efficiency as well. Next, once we get into the scaling side, we're really getting into the execution phase. And so we're going through, in the cash flow, we are executing what we planned, but as we get into the scaling, it's going to take even more planning, and then we're getting into that 3 to 5 year time frame. And what is that plan, and then what are my steps to execute that plan? And so when you're in the scaling, you're thinking a little bit farther ahead than you are early on. And early on, you're thinking almost paycheck to paycheck. How am I going to make it through the next 2 weeks, the next month, the next few months, the next quarter? Am I able to make it through? When you get into the cash flow, you begin to think kind of into this 1 to 3 year time frame. Once you get into the scaling phase, you're thinking 3 to 5 years out. So every decision that you make, we're not just thinking how is it going to affect me this month, but how is it going to affect me in 3 to 5 years? And then once you get into the truly the monetization, and then the exit or succession stage, and so once you kind of get into those final stages of business, to whether you're wanting to kind of step out of the CEO role of the business and bring other people in, and that's just really becomes the monetization phase, or you want to exit out of the business altogether and sell it. You're at that point, you're probably going to want to bring somebody in to look at due diligence, to look at your liquidity risk, capital structure, and then the key valuation metrics. And these are areas, having worked with businesses that are in this particular phase of business where they're looking to exit, these are extremely important. And these areas, I mentioned these words, and you may not fully understand what these mean. Maybe we'll talk about this a little bit more in a future podcast. Understanding what is that due diligence that is required. If you've ever tried to sell a business, you understand this. You'll actually hear those words. The party that's looking into buying your business, they're going to have an attorney, they're going to have an accountant. So you better have an attorney and an accountant on your side as well to be able to understand what is that due diligence process, making sure that the communication is there, that person understands what needs to be provided. What is the other party looking for, and how should those questions get answered? Because many times it's almost like a job interview. You end up with these questions, and some of them can be very complex, and how you answer them can really determine whether or not you're going to get that sales price you're looking for out of your business. Liquidity risk, not going to get into this. I could really be a standalone podcast, the capital structure, and then also the key valuation metrics. So all of those different components need to be there once you're into that final phase of your business, and whether it's monetization, or especially if you're getting into the point of looking to exit your business or implement your succession plan. So just some ideas, some things you'll want to work on depending on what phase of your business. For most business owners, they'll need to bring somebody in, even as the owner of an accounting firm. There are times that I'll bring other people in to help, even with my numbers, because sometimes I can get lost in the weeds of my own business and not see the clarity in the numbers that I need to. And so I'll bring other people in, even in my seat, to help me, even though I'm doing the same thing for others as well. Hopefully this particular podcast brought you value. I'd encourage you, if you haven't already, please consider subscribing to the Belk on Business podcast. Once again, this is Josh Belk. Have a wonderful day.